Hello, welcome back. We're on day 2 at Beaver Creek, and I'm with Peter Benkney, the Director of Investor Relations at Gold Royalty and a regular on the show. Peter, good to be with you.
Yeah, thanks for having me back, Peter.
Look, you always, people seem to love the Gold Royalty story. Whenever we do a video, people seem to enjoy it. It's always one of our most popular, so it's appreciate having you back on. Sorry, you can tell I've done about
It's
50
the last
of
one
these.
of the day. It's fine.
But anyway, why don't we... Look, why don't we, for those less familiar, I think everyone should be familiar with you on the platform, but why don't you just give us a real brief intro and we'll get a bit of an update.
Yeah, I appreciate the positive feedback, Peter. Brief intro, Gold Royalty, we're a royalty and streaming company. Went public just over 3 years ago, March of 2021. Started with 18 royalties. We've grown through multiple means, corporate M&A, third-party acquisitions, royalty financing, and now we sit today with over 240 royalties, 7 of which are cash flowing, anchored on some of the biggest gold mines in North America, and the best revenue growth rate within the royalty and streaming sector. I think it's great to hear the positive feedback. I think one note here, and we're not alone in this in the equity markets, is it is a challenging equity market, and our share price is not immune to that as well. It has been frustrating. But despite that, those 242 assets continue to deliver, and fundamentally, we're in a very sound place in terms of the business.
Yeah, look, you're not alone. I think the junior royalty space has been hit a little bit, and obviously the junior space in mining in general has been pretty hard, even with the gold prices as they are, which is an interesting story. But look, I think there's been some really big news this year on quite a few different multiple fronts. Obviously, you did Borborema towards the end of last year and Cozamin, which was great. You've then done the Varis acquisition. You've also had Cote come online. Mm-hmm. I mean, why don't we just talk about a little bit of, because your market cap is down, but in terms of your revenue forecasts from last year to this year, it's changed dramatically. So I think maybe we can just talk a bit about how this evolution has been, even just over the last 12 months.
Yeah, that's really what we've focused on in the last 12 months, is bringing the company to the inflection point we're at today. Our cornerstone asset, Canadian Malartic, cash flowing now, but really ramping up towards 2028. And we've acquired 3 cash flowing royalties recently. You mentioned Cozamin. We acquired that last August. The Borborema financing we acquired in December of last year. And then most recently, the Varis copper stream. These 3 assets alone are representing over 50% of our expected gold equivalent ounces in 2025. So a real enhancement to the near-term cash flow profile. And that future growth isn't 2-3 years away. It's this quarter, next quarter, and Q1 2025, where this cash flow profile is really shifting. 2023, we had $5.2 million in revenue. 2024, we have guidance of $13 to $14 million in revenue. And looking ahead, we'll benefit from a full year of production as several assets ramp up. Cote, going to be one of Canada's largest gold mines, had commercial production last month, ramping up to full nameplate capacity, or 90% of capacity in Q4. Similarly, Varis, approaching nameplate capacity in Q4. And then Borborema expected to achieve initial production in Q1 of 2025. So a lot of very near-term catalysts, and we're right at that tipping point of significant change in our cash flow profile.
Good, okay. And look, I think we haven't actually had you back on the show since Varis. So I know we did a webinar together, which for a load of investors who are interested in the acquisition. So recommend people, if they really want to dive into that, go watch that. Mm-hmm. But I guess a high-level overview, how much does Varis change your position as a company? And maybe we could just talk a little bit. Obviously, it's owned by Adriatic Metals. I think most people in the UK and Australia in particular will definitely know this asset and mm-hmm. how great it is. But why don't we just familiarise ourselves with the asset and what it does to your cash flow?
Yeah, brief recap. So we acquired a 100% copper stream over the Varis silver zinc project in Bosnia from Orion, a private equity group. And the Varis project is a high-grade polymetallic underground mine, and the copper component that we have through our stream, and this is our first stream, represents only 2% of the revenue of the mine. The asset achieved first concentrate sales in Q1 of this year, and as mentioned, ramping up to commercial or full nameplate capacity by the end of the year. Interestingly, after we closed our acquisition in June, there have been some developments at Adriatic as an entity. We saw a shift in the management team. They brought in a new CEO who has a really strong pedigree from BHP. Paul Cronin, the former CEO, did a great job driving that asset forward, and a lot of respect for what he built there, and we're excited to see the new team with that operating pedigree really deliver it as a producing asset. Yeah. We also saw a ruling by the Bosnian court that there was potential issues with the removal of trees on the expanded tailings facility. Now, actually just yesterday, Adriatic came out with their Q2 update. They say they're well advanced on looking at alternative locations for the tailings, and there's no expected impact on production. So tough timing, but ultimately not impacting the production profile or the economics of our investment.
Okay. And obviously you did update guidance when you did the deal. So how did the guidance change from before and after?
Yeah, we tried to be relatively conservative with our guidance, just given as a royalty company, we're basing our forecasts on the information we receive from our operating partners.
Yep.
But we saw an increase to $14 million from around $11 million in revenue after the Varis acquisition, and that's based on a gold price of $2,000 an ounce and copper of $4.25. So we're not baking in the great run in the commodity price that we've seen here.
Okay. Look, I know you haven't given guidance for next year, but I think it's pretty safe to assume that it will be another break-in year for you guys in terms of revenue growth.
Yeah, I mean, it comes back to that point of us being on this inflection of the portfolio. We're only getting a couple quarters of Cote and Varis, and they are still ramping up. And Borborema is on track to have initial production early next year. The rest of the portfolio, we've got 7 cash flowing assets. They're, for lack of a better term, just keep on chugging along, producing the amount of revenue that we've seen in previous years, and they've had good exploration growth as well, but those new assets coming online are the major drivers of growth.
Okay. Look, we were talking to another royalty company, similar market cap, similar type of revenue, and we were talking about this idea of there needs to be a bit more consolidation in this space. You've been a proven consolidator over the years. What's the mood at the moment, not even just at this conference, but in the junior royalty space? Because obviously valuations are low. What's the chances, do you think, of major royalty companies now looking to do some acquisitions, or do you think it's more of a case of the smaller players here who can obviously come together, really build up that cash flow, and obviously reduce G&A? What's the more likely outcome, do you think, and what needs to happen?
Yeah, I think it's an interesting point. We find ourselves in the market and always been strong advocates for the rationale and the need for consolidation in the sector, especially amongst the small cap end, and the opportunity that's also there in achieving scale, achieving that re-rate as consolidation occurs. With that said, public markets are dislocated right now with where the commodity price is and the fundamentals of the company. And while you may say there's a relative value rationale there, it is difficult at literally the bottom to rationalize an M&A deal. And I think what we've shown since our round of consolidation in 2021 is we've been incredibly disciplined in how we continue to grow the portfolio, and we'll continue to do so going forward.
Yeah, I think that's an interesting point. But obviously, with the relative valuation point there, would it? So because the junior royalty spaces is at the bottom of the market, would it be more value accretive for some of them to pair up, become bigger, become a bit more immune to takeover, and obviously have a shareholder, say you did a 50-50 equity deal with another company, you'd have that lower G&A overall, or the same G&A, but a much larger revenue, almost double your revenue in theory. Would that be more attractive, say, to shareholders, more value accretive to shareholders, in your opinion, to say, I don't know, Franco-Nevada or Triple Flag or someone coming in and picking these guys up?
Yeah, I think there's the on paper more of a rationale for the potential re-rating of MOEs amongst smaller cap peers. But again, I think it does become challenging, not just on the valuation side, but the other aspects of M&A. Deals are done by people, and people need to come to the table to make those deals happen. I'd also note within the small cap end of things, and something that really does differentiate gold royalty is not just the cash flow profile or the revenue profile or what a deal looks like on the spreadsheet. What is actually the asset quality you have there? Yeah. Do you have those marquee assets that really justify a premium valuation? And that comes back to your point on what do Franco-Nevada, what do Osisko, what do Wheaton, what do Royal look for in potential acquisition targets? And it's those marquee assets that actually matter or actually have critical mass. So it's been very rare to see those players play in corporate M&A, but to do so, it has been for the likes of Great Bear Royalties with
Yeah.
Royal Gold.
Yeah.
It has to be a real flagship asset to get them to look at the corporate side of things.
Okay, well that's pretty good news for you, isn't it? Because it's obviously you've got Odyssey, you've got Cote, you've got Ren, operators such as Barrick, Newmont, Agnico Eagle,
And that's,
Kinross. I mean, everyone. Most of your flagship assets are essentially run by the majors in this space. So it eliminates to a certain extent development risk and production risk, which I'd argue.
Yeah. I mean, that's been by design. It's no
Yeah.
accident partnering with some of the larger companies in the sector as those that are driving forward our key development stage assets. But I would say at the current valuation, we see a lot of value as these assets re-rate and deliver on the cash flow that we see ahead of us.
Okay, and in other news, I see that you've got a new member of the team.
Yeah. Recently, just last week actually, we had Jackie Przybylowski join the team as VP Capital Markets. Very excited about this appointment. Jackie joins us from BMO. She was a senior research analyst covering major gold producers and major base metal producers as well on the copper side. So incredible connectivity, immense expertise on evaluating opportunities as well. And we're a flat entrepreneurial organization, so excited to bring her into the fold and get the story in front of new names as well, given her connections.
Yeah, look, I know she's coming in as an IR position, but surely with someone with the same experience as Jackie, I mean, obviously you've already got David Garofalo and John Griffiths and Andrew Goebbels and yourself who've all got a pretty good contact list, and some of the ways you've actually gone about acquiring royalties is through that network that all of you had through all of your experience. But obviously Jackie now adds, I don't know, in my opinion, when I first saw when I first heard about this, it wasn't just the IR capabilities in terms of the funds that she must know, but also the majors and the mid-tiers that she's covered. Surely there's opportunity there for...
Yeah, I mean, as a research analyst, she was intimately knowledgeable on all of those assets that she covered, and so that's exactly to your point. It isn't just IR; it's a resource that really improves the bench strength we have within the company. She's a metallurgist by training, so a new set of expertise there, and I think that the list you named off of senior management, it is a flat organization with a skill set that isn't siloed. Our CFO isn't just an accountant.
Yeah.
Our IR professional isn't just an IR professional. We need to be entrepreneurial. We're a small growing company, and all of us are looking to grow the portfolio and preach the story.
Okay, good. Look, last question is, 12 months from now, we're sitting here at Beaver Creek. What do you want to be able to tell me?
I think it's delivering on this cash flow. Obviously, it's been frustrating with the share price, and after the last 12 months, I think we know what we can control. The portfolio is in very good health. We're going to see that deliver over the next 12 months, and ultimately, I think that's going to be the catalyst for a re-rating. But I hope to be able to tell you that, look at these assets, they produced, and we're in a much stronger operating cash flow position than we were a year ago.
Good, Peter, thank you.
Yeah, thanks.